Good morning. Mortgage bonds up a little bit off their best levels. Stocks in the pre-market also up a little bit and off their best levels. We did get some news this morning. Initial claims came in. Remember last week's number, which was the sample week for the jobs report, came in very low at 262. This week's number up 10,000 from last week's unrevised number, so 272. Still a very good number, but up 10,000. It's really been in this range between this 260-ish and under 300,000 for quite some time. We also got durable goods orders, and this is heavily dependent on aircraft, but the number was a good number. Last month was a pretty bad number, kind of reversing the trend down about 4% plus. This month's number up a little over 4%. So a good number here on the durable goods side. So the bond market didn't really respond too much. Stock market didn't really respond too much. James Bullard out of St. Louis, Fed president, he's been on CNBC this morning talking and really kind of making the argument for the fact that the Fed should really get off of this predicting 4 rate hikes for the year and talking about the fact that it really should be data dependent. Didn't think it was appropriate to raise rates in this environment that we're in now. Kind of all the stuff that we know, but now we're starting to see some Fed members talk a little bit about it, and we'll see how the markets respond. Yesterday was kind of a day where we saw the markets get whipsawed a little bit. They moved down. We're in a big range. We've talked about this. The fact that we're in a big range means that we can get these moves. Let's take a look at the chart and see where we are. Okay, we're up 14 basis points right now. And you can see this big range that we're in does allow for some big moves, which can prompt an intraday reprice without getting out of the range. So here we are. If you take a look really for the past, oh goodness, since January 29th here, so pretty much almost a full month, we've been, so to speak, sideways, but because the range is so big, we've had reason to do some protective alerts because it could be some intraday price changes. Now, when we take a look at the stock market here, stocks are not open yet, but they do appear to be opening, at least for now, a little bit to the plus side. They're also kind of within this trading range that we see here. Now, it's really defined between the 25 and 50-day moving averages. Yesterday, dipping way down to touch right on that 25-day moving average and really just above the Fibonacci level before moving higher to the next ceiling, the next Fibonacci level. So today we'll probably be running right up against the ceiling here. We'll see which way it goes. If stocks do stall, expect mortgage bonds to be the beneficiary. 10-year Treasury note, 1.738%. So looking to be, again, kind of a sideways move, but a gigantic range. And here's the thing, team, is that there is a lot of room to the downside, not just to touch support here, but when you take a look at the United States and you compare it to other places in the world, there's reason to believe that the 10-year Treasury could drop to touch all-time low levels and even break them. Is it possible to see a 1% U.S. 10-year Treasury sometime this year? Well, certainly not out of the question. We'll see. That would do a lot for the refinance business, certainly, but we'll take a look. We'll take it step by step as we go. For now, we're going to begin the day today by floating as we try to rebound a little bit. You can still see we're down on the rate sheet from yesterday, so that we were prompted to do an alert to lock yesterday. We're still down about 17 basis points. If rates were to come out right now, you'd see about a 17 basis point worsening from where we were yesterday if you did not already get a reprice for the worse. So again, for now, we'll begin the day by floating. And of course, if things do change, you will be hearing from us with an alert. Have a great day.